I think gold will do well.
Okay.
Gold moves generally on fear, and there's a lot to be afraid of. I think the broad economy is in good shape, but I think the U.S. government is doing the best job they can to debase the dollar. And I think that gold will benefit from that. People say that gold is breaking out to new all-time highs. That's silly. In inflation-adjusted terms, gold hasn't broken out at all. Gold has broken out against almost every currency in the world except the U.S. dollar. But I think that gold will do well in U.S. dollar terms. Silver moves after gold. Silver moves after gold has established momentum.
There's no denying that the current macroeconomic backdrop is fueling a perfect storm for commodities, positioning the entire sector on track for another blockbuster. In 2023, 27 commodities marked the third consecutive year of remarkable performance. Once again, the bullish momentum has spilled into 2024, propelling a long list of commodities on a red-hot run, with many already notching up impressive double-digit gains within the first month. Gold prices are set to soar higher, and it's only a matter of time before the precious metal breaks another record high. Despite acknowledging the positive state of the broader economy, Rick Rule raises concerns about the efficacy of US dollar-based savings, emphasizing the government's perceived success in debasing the currency. He predicts that gold will likely benefit, positioning itself as a safeguard against the diminishing value of the dollar. In early 2021, a social media-driven movement known as the silver squeeze aimed to drive up the price of silver by encouraging retail investors to buy physical silver and silver-related assets. While it didn't lead to a massive price surge, it highlighted the potential for retail investors to influence the silver market. Noting that silver has faced criticism, particularly after the silver squeeze event in 2021, Rick finds appeal in the fact that silver is currently widely disliked. Silver tends to exhibit significant movement after gold has established momentum, providing insights for investors considering both precious metals. Furthermore, the US dollar, serving as the reserve currency for the global economy, confronts a dual reality of benefits and drawbacks. Treasury Secretary Janet Yellen identifies it as a potential threat to the dollar's hegemony. In the evolving landscape where US dollar hegemony might shift, there remains substantial global demand for the currency. Rick highlights a crucial aspect. A significant portion of the world's external debts is denominated in US dollars, and this demand endures as nations settle these financial obligations. We will present clips from Rick Rule's interview with Kitco News. But before we do, if you want more videos like this, please hit the subscribe button and turn on the notification bell for more updates. Thank you, and enjoy the video.
I think gold will do well.
Okay.
Gold moves generally on fear, and there's a lot to be afraid of. I think the broad economy is in good shape, but I think the U.S. government is doing the best job they can to debase the dollar. And I think unusually for a government, they're being successful. I think there's a lot to be concerned with about the efficacy of U.S. dollar-based savings. And I think that gold will benefit from that. People say that gold is breaking out to new all-time highs. That's silly. In inflation-adjusted terms, gold hasn't broken out at all. Gold has broken out against almost every currency in the world except the U.S. dollar. But I think that gold will do well in U.S. dollar terms. In my experience, answering the rest of the question, silver moves after gold. Silver moves after gold has established momentum. What I like about silver is that it's roundly hated. The sort of silver squeeze, the sort of Reddit silver craze.
The step sibling.
In 2021 generated a whole new generation that hates silver. Jilted lovers, if you will. And there is nothing that I like as much as a market that's hated. The silver equity market reminds me of the uranium equity market in 2022, which was stupidly cheap and had to be bought. So while I think I'm early on the silver trade, I can't help myself because I love hate. When I see the level of hate around the speculative juniors, I know I have no competition in the space. I think the most important new investor in the junior sector will be established mining companies. They're generating a lot of free cash. They have pretty good balance sheets. They have underinvested in exploration for 20 years. So they have no choice but to either joint venture or buy juniors. The institutional investors who are generalist got burned very badly in mining in the decade 2000 to 2010. They're not going to come back in until it's too late. That's just the way they are. They have a fondness for tops, which is wonderful. It gives us somebody to sell to. The US dollar is the worst currency in the world, with the sole exception of every other currency. The US dollar is the most liquid and most transparent market in the world. There's no substitute for it. The BRICS countries don't trust the U.S., but they trust the U.S. more than they trust each other.
Right.
So I think that you'll see the U.S. dollar be the world's reserve currency for a very long time. I think that U.S. dollar hegemony is over. I think that the American people and the American Congress have done the impossible, which is to say they've debased the best franchise in the world. But there's so much ruin left in the U.S. dollar that the forecast of its demise is amazingly overstated. Something like 95% of the external debts in the world are denominated in U.S. dollars. Demand for U.S. dollars continues simply as countries extinguish those debts. At the same time, debt issuances around the world are 93% in U.S. dollars, which is to say that a borrower's cost of capital, if they can afford to pay back in U.S. dollars, are cheaper than in any other currency. The anti-dollar narrative, for the time being, while funded in fact, is just narrative. It ignores current arithmetic.
Uranium prices have been experiencing a fourfold increase over the past 4 years, driven by a growing demand for nuclear power and various supply challenges. However, the shares of uranium miners and exchange-traded funds, ETFs, have yet to catch up with this substantial price surge. Currently trading around $106 per pound, uranium is anticipated to continue upward, with analysts projecting further price rallies. Citibank, in particular, anticipates an average uranium price of $110 per pound in 2025. The bank attributes the primary drivers of the bull market to the closure of mines, a consequence of years of overproduction and low prices. Rick emphasizes the significant impact of the supply and demand dynamics on uranium. Once characterized by oversupply, the market is now grappling with a shortage. Structural changes have further contributed to a shift from a spot market to a term market, reflecting the evolving landscape of uranium trading. Let's get back to the interview.
There's at least 5 years left in this market, but the easy money's been made. We could have a 20-minute conversation on the changing structure of the uranium market and how that means that the way people invest needs to change, but we don't have time for that. The take home is this: if you were invested in the uranium juniors, they're uniformly up 300%, 400%. When they moved from being hated to being tolerated to being loved, the easy money has been made. So I personally, big speculator in the space. 3 years ago, I've taken my money off the table. I have a lot of uranium stocks left, but what I have left is just my profit.
Interesting.
The money I had invested in the sector, I've got that back. It's safe. It's in my genes.
And it's not going into more uranium.
The structure of the uranium market is changing, which means that there's big money ahead of us, but the easy money has been made. People's time preference is so short that they didn't care about the arithmetic equation. They cared about whether a 20-cent stock was going to go to 22 cents. They didn't give a damn about reality. They cared all about perception. Those people are my normal victims. What happened in terms of uranium is two things in supply. One, my former employer, Sprott, bought 50 million pounds of uranium. That supply went to supply heaven. The second thing that happened is that the Japanese, the other major source of supply, decided to turn on their nuclear fleet again. So that supply came out of the equation. We went from being massively oversupplied to having the spot market short uranium. There's a pinch. The structure of the market is changing. It's going from a spot market to a term market. Investors haven't caught up with that. That has profound implications. The implications are bullish. My suspicion is that we have a real risk of an economic slowdown. And an economic slowdown will not derail a commodity market, but it'll postpone it or make it less severe. Remember that you can have shortages of supply if you reduce demand and it doesn't move prices. Looking longer term, it is unescapable that there are 8 billion of us on the planet, that we're doing a wonderful job as a species, taking the 3 billion people on Earth who are the poorest of the poor and increasing their material standard of living. We will absolutely, positively, without a doubt, without fail, have supply shortages in commodities. Will it occur in 2024, 2025, 2026? Probably not. Will it occur in 2028, 2029? Almost certainly. As an investor, you need to prepare yourself for that.
Gold climbed past $2,020 per ounce on Monday, recovering from recent losses amid escalating tensions in the Middle East. Analysts project gold to hit $2,089.21 ounce by the quarter's end. Meanwhile, silver closed the week stronger at $22.80, up 0.80%, showcasing resilience compared to gold. The crucial support range for silver lies between $22 and $21.88, a key determinant for future trends. Will these precious metals maintain their momentum, or will external factors influence a price shift? Share your thoughts in the comments section below. If you find this video informative, remember to support our channel and turn on notifications to stay informed about our latest videos. See you in the next video.